Let's get into it. Uh-oh, look at that. When it comes to these taxes, you got to think like the agent. You got to think like an IRS agent. I've been audited. That audit was about 2.5 years. I complained. I told the Lord, this ain't fair. The devil's a liar. This is unfair, Lord. Why are they doing this to me? I had to get a tax attorney. The tax attorney, come to find out, the lady that was auditing me, he knew the lady, practically he knew everybody in the building. And I had asked him during the audit, I said, sir, I said, now you represented businesses and companies, and I said, so how much paperwork did they have to provide the IRS? I said, what's the most? He said, well, I did a business, and the most paperwork they had to provide was 500 pages. 500 pages. But ask me how many pages I had to present over 2.5 years. 10,000. Well, I mean, I serve Jesus, so there's a target on me. Not only, it wasn't a regular IRS agent that audited me. It was a lady in the special unit. But I don't care what unit they in, they ain't bigger than my Jesus. Now the Lord had to work on my pride because I kept saying this is unfair. This makes no sense. But I was able to see it from a different lens because now I know what they ask for. Now I know what you got to have. As long as you got the paperwork, you good. So those that have a business but you're operating out of your personal account, no. Remember, the IRS agent is the judge and the jury. Remember, they're auditing lots of people. They ain't got time. They just going, if it ain't right. That lady told me after I presented the paperwork, she was talking about I had a $200,000 tax liability. I said, the devil is a liar. What you talking about? I kept presenting that paperwork. And then the Lord set it up to where I had to sit down with the lady. That's not normal. Most of the time when you get audited, there ain't no sit down. You send in the paperwork, whatever they say it is, that's what it is. I had to sit down with her. I'll never forget, the Lord said, when you go in there, he said, I'm going to fight your battle. Don't you say a word. I said, yes, sir. So I was praying. And the lady was, I had 7 binders this thick of stuff that I presented. My lawyer told me, man, you should have been a lawyer. Well, it's crazy. When I was doing the paperwork, no lie, it was like the Lord took me up and literally brought everything to my remembrance. And I was literally typing stuff out, remembering everything word for word. Word for word. Now, what's crazy is I sent in the paperwork, and they still try to say that I owe, after she looked at it, well, I'm still seeing that you owe 115 grand. Okay. I have a question about this. I said, all right. So it was in 2017, the Lord told me to buy a house to fix it up because I'm in real estate too. 2017, he told me to buy a house. I bought it June 2017. And those that are in Houston, Harvey hit us in August of 2017. So I bought a house in June. I was fixing it up. Paint, floors, everything. House never flooded, ever. Wasn't in a flood zone. After Harvey hit, the house had 6 feet of water in it. I said, Lord, now what's going on now? What's crazy, the house that I fixed up, the house next to me didn't get flooded because the street went like this. So my house took 6 feet, house next door 8, 12, 15, 20. It never happened before. I said, Lord, what's going on? If you know anything about real estate, which I know one particular person in the room does, hard money loan. I had took out a hard money loan to buy the property because the anticipation was fix it up. I was going, before that rate went up, not say the rate, but the payment went up in the hard money loan, I was going to be out of it. Well, it took me 2.5 years to sell that house. I started with a $900 payment, and I was paying $2,000 a month. So I had to fix it up and pay $2,000. And what's crazy is I was in transition from one home, looking for a home, but when you do that, I couldn't live in that home. So now I'm carrying the burden of a $2,000 mortgage, getting the house fixed up, making sure people don't come up in there and mess it up, because, that's the other thing. You fix the house up, people come in there and try to tear the house up. And we had one incident, it was nobody but the Lord. Somebody came in there and took a mirror, but they didn't do no damage. I said, thank you, Jesus. But my point is, my renovations were well over, I spent well over $60,000, $70,000. Now, when I end up selling the house, because the Lord said I was going to sell the house, I didn't make no money. And I didn't understand at the time, what you tell me to do this for, and I didn't make no money. Uh-oh. I saw everybody jump. Y'all safe, don't worry. I said, so Lord, why did I do this? So I'm complaining. It is what it is. I was just thankful to the Lord I was able to sell it. But not knowing I was going to be audited a few years later. So I was sitting in front of the IRS agent. She said, okay, well, let's talk about this $55,000 that you owe. I said, all right. She said, now what's going on with this house, this property here? I said, well, she was asking because I sold the house and the proceeds were $55,000. They were counting that as income. But I had already presented the paperwork to her that I put $70,000 into the house. So I could literally write all that off. So I was calm. I was like, Lord, I showed the lady this already. He said, no, go find it. I presented it to her. She said, drum roll. And she took $55,000 off of what I owed. That showed me something with them. You'll show them something, they don't see it, they'll still slap you with it. And the thing about fighting the IRS, you got to pay the fine first and then try to come back and fight. So let's say you owe $100,000. They want you to pay the $100,000 first, get a lawyer, and then come back and try to fight. That's unfair. So I went from $115,000 to $65,000. Then she looked at another thing. Well, what's going on with this? It was with the business because I started a hot shot business. If you know anything about a hot shot, you got your, they pull those 40-foot trailers or those 32-foot trailers. I don't know if y'all, it's dualies. Y'all know what a dually is, right? Y'all know what a dually is? Okay. Y'all know what a dually is, the big trucks, right? Have you ever seen those dualies pulling stuff up down the highway? That's called a hot shot. So I started that in 2020, bought like 3 trucks, ended up with like 5 trucks. It didn't work out. I ended up selling the trucks. But the thing is, when it comes to the IRS, anything over 6,500 pounds, you can write off the entire amount. Now, what's crazy is I didn't make money on the real estate, on the house I flipped, nor did I make any money with the hot shot business. I was bringing in $140,000 a month, but my expenses was $160,000. Gas, the driver tearing up your stuff, and trailer, headache. I'm not here to discourage nobody, but that business is not for me. But what I thought was a loss came later to be a gain. I'm in front of the lady, she asked me about the trucks. And I said, yeah, I had 3 of them. Wrote them off. Them trucks were in my business name. I could prove they went from New Mexico, New York, California, She said, drum roll. Took another $55,000 off. Now, what I thought initially was a loss was a setup to come up against that. But I didn't understand it at the time. And then there was the last $15,000, and she was asking me this, asking me that, and I provided the paperwork, and then when I finally got the bill from them, they said all I owed was $3,300. Now, that was not me. That was all the Lord. But we have to be very sensitive when we think we around here complaining about we didn't took a loss. It was a loss, quote unquote, to me, but it was a setup to get me out of the next thing that the Lord, because he was already ahead of the enemy on my behalf without me even knowing it. So I'm telling you now, having an LLC and having a business is to your advantage. So you want to get all this money in your name? That's fine, but you need to have a business to offset the increase. So now, and I've talked about this in my Patreon group. I've taught people how to get LLCs. It's simple. It's not difficult. You ain't got to go to no legal Zoom. Those in Texas, you go to Secretary of State, put in your business name. They make sure that nobody else has it. $300, you get it in less than 24 hours. Go to your bank account, go to the bank, open up your business account, boom. Everything I do, from every meal, every drink, when I go out of town or out the country with my wife, I don't care where, I always spend out of my business account. I don't have to have a receipt. My bank account are the receipts. Because that's what I had presented to the IRS, literally books and books and books of business accounts. See, there's no discrepancy. See, the last thing you need to do is be in front of an IRS agent and it's your personal name and you telling them, well, that McDonald's was a meeting. Man, please, you're in trouble. You got to learn to separate the two. Now, I can hear some of y'all now. Well, crypto taxes, it be in your personal name. Okay. I work for a company called WSP, me and Pastor Keith, and we are FEMA agents. So we go and assess like the damage and this, that, and other as contractors, but they pay us W-2. So that's in my personal name, but I have 8 businesses. 8. So the money that they take in taxes from me on my W-2, I get all that back because all of my write-offs with the business. I have literally 5 or 6 LLCs attached to my 1040 on my taxes. So, okay, I don't care if I make whatever, $1 gazillion off the crypto in my personal name. I also got a gazillion businesses that's going to offset the liability. So I'm telling you now, you need to get a business. And hear me clearly, now. Don't get the business after the increase. Get it now. You need to seek the Lord on the name. Don't get a business that you make chairs. I got ABC chairs. You've limited yourself. You want the business to be what? To where you can do what? Multiple what? Things. One of my businesses is HarambeConcepts.com. The Lord gave it to me in a dream. Harambe in Swahili means pull together. Vivid in a dream. I said, Lord, what is this? He had me look up the name, means pull together. That's the name of my business. I have Harambe Concepts LLC and I have Harambe Concepts International LLC. Domestic and global. Because I know I'm be doing business outside of the country. So you got to think like an IRS agent. So crypto taxes. According to the Internal Revenue Service, most cryptocurrencies are what? Convertible virtual currencies. This means that they act as a medium of exchange, a store of value, a unit of account, and can be substituted for real money. For federal tax purposes, they look at crypto, virtual currency, they treat it as property. It's like a real estate, like a house, capital gains. General tax principles applicable to property transactions applied to transactions using virtual currency. Now, what is virtual currency or digital assets? Remember, I'm thinking like an IRS agent. As I teach, I'm teaching as if we work for the IRS. Virtual currency is a digital representation of value other than a representation of the US dollar or foreign currency that functions as a unit of account, a store of value, and a medium of exchange. Some virtual currencies are convertible, which means they have an equivalent value in real currency or act as a substitute for real currency. The IRS 1040 form instructions note that the following description of crypto referred to as digital assets. That's how the IRS looks at your crypto. Digital assets are any digital representation of value recorded on a cryptographically secure distributed ledger or any similar technology. For example, digital assets include NFTs and virtual currencies such as cryptocurrency, stable coins. A particular asset has the characteristic of a digital asset. It will be treated as a digital asset for federal income tax purposes. So how they look at your crypto, they look at it the same way as like real estate, house, same thing. That's how they tax it. Now, this is a question that we all had on our taxes in 2023. Did you receive as a reward, award, or payment for property or services, or sell, exchange, or otherwise dispose of a digital asset or a financial interest in a digital asset? They've asked that to everybody in the room that lives in the U.S. It's either yes or no. As of right now, they're basing everything on you being honest, right? Now, this is when you check yes. Normally, a taxpayer must check the yes box if they receive digital assets as a payment for property or services provided, right? So, for example, I've had two people in the conference pay using crypto, right? So that's a tax event, right? So whether I pay you in Shiba, crypto, that's the same way me paying an employee. Whether you're getting the fiat or whether you're getting, I think at one point in time, Odell Beckham had received, I think his 2020 salary in Bitcoin. So he still has to pay taxes on that. Or did you have to check, yes, if you receive digital assets resulting from a reward or a award. All right? Or if you receive new digital assets resulting from mining, staking, and similar activities. Or if you receive digital assets resulting from a hard fork, a branching of a cryptocurrency's blockchain that splits a single cryptocurrency into two, or you disposed of digital assets in exchange for property or services. So when they say dispose, right, dispose simply means that I'm cashing out. Simple and plain. So let's say I got my XRP. I done sold that for cash. I done dropped it in the account. That's a tax event. I've disposed of it. Dispose of a digital asset in exchange or trade for another one. You do know when we, for example, when I taught y'all about electroswap, you get the ETN, right? And then you exchange it for what? Bolt. Well, when I'm switching, if I'm going from XRP to USDT or USDT to BNB, that's a tax event. That's a tax event. It says, right, disposed of a digital asset in what? Exchange or trade for another digital asset. So you see how, but you see how difficult that can be as far as accounting purposes? I mean, I'm only going to speak for me. You know how many exchanging and trading I did, but all that's a tax event. Or I sold a digital asset or otherwise disposed of any other financial interest in a digital asset. I cashed out. Now, this is when you say no. Normally, a taxpayer who merely owned digital assets during 2023 can check the no box as long as they did not engage in any transactions involving digital assets during the year. They can also check the no box if their activities were limited to one or more of the following: holding digital assets in a wallet or account. So if I take my fiat currency and I go buy some XRP and it's just sitting either on the exchange or in my wallet, even let's say it jumps up, my XRP goes to $5,000 a coin, and I got $10 million sitting in the wallet. I don't have to pay taxes. I mean, it's the same thing with a house, right? You keep that house for 10 years, you bought it for 100 grand. The appreciation now is worth 1.2 million. You don't pay taxes on it until you sell it. Now, what they tell you in real estate, which is common sense, what do? Man, you don't sell it for 1.2, you borrow against it first, then sell it. So I bought it for 100, I take a loan out for $1 million, I clear 750 grand tax-free because you don't pay taxes on borrowed money, and then I sell it for 1.2 million. So I'm only liable for $200,000. If you play with me, I'll take the 700, put 200 in it, sell it for 1.2, I'm out the game. Now I got $200,000 for upgrade costs that I put in it, and that offsets that, and I clear 500 grand. Come on now, got to get smart. You got to get smart. I hope that made sense. Okay, hear me. I spent $100,000 on a house that appreciated to 1.2 million. You don't sell it for 1.2 million because you're liable. What's 100,000 minus 1? I'm liable for $1.1 million. So I take a loan out against it. I take a loan out for $1 million, clear 900 grand because I don't pay taxes on borrowed money. And then I turn around, if I sell it for the 1.2 or 1.1, then I'm responsible for either that 100 grand or 200 grand. But not if I take 100 grand of the 900 I just borrowed, put upgrades in it, still sell it for 1.2 to offset my tax liability on the 100 or 200 that I cleared. So now I done cleared what? 800 grand, tax-free. And now I got the receipts to prove, to offset the 200,000 in profit on paper because of the upgrades. Y'all better think wealthy. That's what wealthy folks do. Wealthy folks are always looking to spend money. That's why everybody in this room need to repent if you ever put your mouth on a wealthy person. Because you were speaking out of ignorance. They don't need all that. Well, get wealthy. I do need that. Why you need all them 18-wheelers? Don't worry about all that. Why I need the write-offs. Is everybody familiar with Home Depot? You should be, right? Why do you think Home Depot buys brand new 18-wheelers every 2 years or trailers every 2 years? Write-offs. Why do you think they have distribution centers? And so what they'll do is these toilets that they bought, they're loaded up in this 18-wheeler to bring it to the distribution center in Florida. Hear me? So now I got a truck I can write off, the diesel, the person I didn't put in it, all the costs moving the toilet from point A to point B, and then 2 months later I'm taking them same toilets on the country. Now we're going to New York. Now we're going to Chicago. Now we're going to Oregon. Now we're coming back to Southern California, and we're coming back to Texas. I'm just using the same toilets, but I'm moving it from point A, B, C, D, E, F, G. But I get to get all those write-offs to offset the increase that I get for selling the toilets. You better think wealthy. So now you have, you can check no when you transferring digital assets from one wallet or account that you own or control to another wallet or account. So in other words, if I have multiple wallets and I'm just moving my XRP to another wallet I own, that's not a tax event. Or let's say I'm moving it from my wallet to my quote-unquote wallet on the exchange. That's not a tax event. You can check no when you say purchasing digital assets using U.S. or other real currency, including through electronic platforms. Just like I said, you take your fiat currency and you purchase some crypto with it, that's not a tax event. Now, when to report virtual currency or digital asset income? Pay attention. According to IRS Notice 2014-21, the IRS considers cryptocurrency to be property and capital gains and losses. Need to be reported on Schedule D in Form 8949. I know I'm talking over your head because I'm a tax guy, but those are the forms that you use to report property. We know it's crypto, but they look at it like real estate, property. The following crypto activities are taxable events. Selling digital assets for cash. Common sense, right? Now, I know some of y'all may ask, well, what if I sold it for a loss? Well, you still got to report it, but that's a loss that you can what? Write off. Trading one type of digital asset for another. So even if I got USDT, I change it to Ethereum and go buy something, it's a tax event. I'm not saying you owe money, but you created a tax event. So there's a possibility it's something that you need to report. Or using crypto as payment. I use it as an example. I had two people give the conference crypto as payment. Mining or staking crypto. Now, for those that don't understand what staking is, for example, I have my ETH or whatever, I lock it up for 2 years, and I'm going to get a 10% return on it, right? Well, I don't have to pay. Number one, the ETH is locked up, so it's not that I'm paying in that 2-year time, but the gain that I do get from it when it gets unlocked, it's a taxable event. Receiving airdrop tokens. That IRS crazy. So you tell me when I get something for free, because what they're saying, it has value. They want it. They want a piece of it. So if I airdrop you some tokens that are valued at $100 a token, they want their money. Or getting paid in crypto, right? Just like a service. If I tell you to come do the floors in my house and I pay you in Shiba Inu, well, the person I paid is still responsible for taxes. And it says right here, receiving interest or yield in crypto. Now, the following activities are not considered taxable events. Buying digital assets with cash. Transferring digital assets between wallets or accounts that you control. Gifting cryptocurrency. Excluding large gifts that could trigger other tax obligations. Now, not going on the deep end, but you can, gift a certain amount and you can write it off. You can give your kids so much money to where they don't have to pay taxes and it's a write-off for you. Now, a taxpayer who disposed of any digital assets by gift may be required to file Form 709 and generational skip and transfer tax return. Or donating cryptocurrency, which is actually tax deductible. So it's no different. It's like I can donate a house, or I can donate crypto to a nonprofit, or if I'm giving to the church, write off. And you're not responsible for any taxes when you do that. Now, when to report virtual currency. If an employee was paid with digital assets, they must report the value of assets received as wages. Similarly, if they worked as an independent contractor and were paid with digital assets, they must report that income on Schedule C. So if I am a business owner, which I am, and I pay you in crypto, I'm writing you off as an employee with the 1099 because I'm not paying tax. I'm not doing that. I'm not about to give you money and I'm responsible for the taxes. Y'all have to be very good with your paperwork. Don't think you're just going to do everything in your head. I'm here to tell you, all of y'all supposed to be IRS agents. They do not play. They won't see things black and white, and even when they get it black and white, they still fight. Schedule C is also used by anyone who sold, exchanged, or transferred digital assets to customers in connection with the trade or business. So I can have a whole business and I pay all my employees in crypto. But I don't have to pay taxes on that. I'm not doing that. I'm not about to give you money and I'm responsible for the taxes. I'm not doing that. I'm not about to give you money and I'm responsible for the taxes. I'm not doing that. I'm not about to give you money and I'm responsible for the taxes. I'm not doing that. I'm not about to give you money and I'm responsible for the taxes. I'm not doing that. I'm not about to give you money and I'm responsible for the taxes. I'm not doing that. I'm not about to give you money and I'm responsible for the taxes. I'm not doing that. I'm not about to give you money and I'm responsible for the taxes. I'm not doing that. I'm not about to give you money and I'm responsible for the taxes. I'm not doing that. I'm not about to give you money and I'm responsible for the taxes. I'm not doing that. I'm not about to give you money and I'm responsible for the taxes. I'm not doing that. I'm not about to give you money and I'm responsible for the taxes. I'm not doing that. I'm not about to give you money and I'm responsible for the taxes. I'm not doing that. I'm not about to give you money and I'm responsible for the tax When you sell, so another when to report your virtual currency. When you sell, trade, or use crypto as a form of payment, you dispose of digital assets. That disposal could result in a gain or a loss, depending on your cost basis in the units disposed of and the value of the digital assets at the time of disposal. You see all that? I know I'm talking some $15 words, but you have to be very minded. If I bought Bitcoin, hear me out, when it was 20,000, and I think right now it's in the 60s, right? And I cash out, well, I'm responsible between, with everything of 21 and 60, right? But do you know some people purposely sell at a loss so they can have the write-off? I know it sounds crazy, but it's real. They'll purposely, some people right now are purposely buying Bitcoin high, and then when it drops down, they sell. I know that's one of the biggest things in crypto. Man, why are you selling at the bottom? Hold on, you got to know the reason. So if I give me some Bitcoin right now, it's 60 grand, get 10 Bitcoin, 60 times 10, $600,000, and then it dropped down to $30,000. I sell it at 30, I can write off $300,000. Come on now, we're supposed to be thinking wealthy. So, disposed of and the value of digital assets at the time of disposal, regardless of whether you had a gain or a loss, these transactions need to be reported on your tax return. Now, when you receive cryptocurrency from mining, staking, airdrops, or a payment for goods or services, you have income that needs to be reported on your tax return. The amount of income you report establishes your cost basis. So what is cost basis? So my cost basis when I bought that house was $139,000. And then the money I put into it, which was 70 grand. So 70 plus 139,000 is what? 209, right? That's my cost basis. So when it comes to crypto, your cost basis is what you paid for it. So what is cost basis? The cost basis is the original purchase or acquisition price of the asset. For example, if you purchase one Bitcoin for 10 grand, that is your cost basis. The thing about digital currency, you can't do renovations to digital currency. That's the only thing. You can't do that. I can't put a deck on Bitcoin. I can't add a pool to XRP. So if you purchase one Bitcoin for 10 grand, that is your cost basis, which is then used to calculate any capital gains or loss from disposing of it thereafter. Tracking cost basis across the broad crypto economy can be, you see that, difficult. I told you all this yesterday. There's no one tax software that can really track everything that we do. This thing is forever changing. I don't know the answer to that. I told you just have to write everything down, but man, that stuff gets confusing after a while. So all since I'm on camera, do your best. Do your best to try to track it. And, at the end of the day, my Bible says what belongs to Caesar's is what Caesar's. What belongs to God is God, right? So we ain't here to try to, you a believer and you Christian and you stealing. No. No, we're gonna be 100 with the government. But that's why I'm telling you to get a business. Before I pay the IRS, I'm gonna buy buildings, I'm gonna buy land, I'm gonna buy Teslas, I'm gonna buy 18-wheelers, I'm gonna buy dualies, I'm gonna do everything. I'm gonna buy farm equipment. Before I cut them a check, I'm gonna buy stuff to increase my net worth. Now, tax forms used to report and file cryptocurrency. Form 8949 tracks the sales and other dispositions of capital assets. In other words, Form 8949 tracks capital gains and losses for assets such as cryptocurrency. On Form 8949, a taxpayer details the number of units acquired, their dates of acquisition, and the date they disposed it, their cost basis, and any capital gains or loss. See that right there? That needs to be your best friend when you're buying, selling, and trading crypto. So you know the date you bought it, date you sold it, the date you bought it at how much you sold it for. I know it can be a headache, but that's kind of the place they put us. Because see, nobody's buying real estate at that as much. You know, it's easier to buy crypto and do all that. Like, but I don't think the IRS really has like counted the cost of keeping up with that. How are you gonna come after me about something that you can't even keep track of? But they put the burden of proof on what? On us. When I sat with the lady, right, she asked the questions. And so when she asked me something, the burden of proof was on me to provide it. My tax attorney told me that it was a client that he represented, and what he would do for marketing purposes is take his client golfing, bring the family out, and everything. Like, so he paid for the family to come out, put them in hotels, took them golfing, and this was all for his business because he was selling things, right? These are one of the things with the IRS, it confuses me a little bit. The gentleman was able to prove all of those expenses. So when he provided that, they told him it was too much. They told him it was too much. They told him, well, there's a limit on that. What? But I spent it for this. That's what helped me acquire this. No, we capping that off. I'm telling you, they do whatever they want to do. Schedule D reports the following: the sale or exchange of a capital asset not reported on another form or schedule. Now you have your 1099. We should all know what a 1099 is, right? The 1099 reports what? Ordinary income that will be taxed according to your income tax bracket. This form provides information for various income payments, such as crypto, referral bonuses, staking, yield generation, mining, airdrops, hard forks, and other income received through a centralized cryptocurrency exchange. Let me help y'all out. You know, with Coinbase, right, when you refer other people using your referral code, right, they'll give you $10 or $20 worth of what? Bitcoin, right? So when I started my YouTube channel, I would have my, hey, use this referral link, blah, 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 blah. But I'm responsible for the taxes for that because it's a reward. So I remember, Coinbase, they keep up with all that, and they'll give you, a form and all that, and you got your capital gains and loss. But even receiving a reward, that's a tax event. Now, if you receive $600 or more this year in crypto earnings or bonuses or even payment, a 1099 will likely be made available by the platform that issued the payment. Stop right there. All these crypto platforms are not giving paperwork. I'm going to be honest, I only know of one, Coinbase. Crypto.com not doing it. These other platforms that don't operate, they're not doing it, right? So, technically, the IRS wouldn't really know unless somebody sends in paperwork showing that you received, right, income. Now, I'm not telling you, so what you saying, Crypto, I ain't got that. I ain't say that. I ain't say that because, our moral compass is held according to the word of God, right? So even though it's not reported, they'll never find it, you still want to be honest about it. Then you have a 1099-B. It's used to report the disposal of taxpayer capital assets to the IRS. Traditional financial brokerages provide 1099-B forms to customers, but cryptocurrency exchanges have not been required to do the same in the past. So the IRS has been coming after these exchanges to provide this paperwork so they could get their money. See, they know that right now they waiting on me and you to say, yeah, I got it. No, so they come in, they cracking down on the exchanges to provide the paperwork so they can get the money from us. Then you have what you call a 1099-DA form. Pay attention. This is something that they just made effective. A law passed by Congress in 21 will soon require digital asset brokers, so that's your exchanges, that's your intermediaries, the middlemen, to report what? Capital gains and losses, Form 1099-DA. When digital asset brokers begin providing 1099 forms to customers, it will become much easier for taxpayers to know their what? You see how they word that? So it'll be easier for you to know your tax liability. No, it's easier for you to come after me. Digital asset brokers, as outlined in the Infrastructure, Investment and Jobs Act, will be required to significantly expand tax information reporting. Pay attention. Digital asset brokers will be required to report customers, transfers, original cost basis for both broker to broker, broker to non-broker, or external wallet to address, transfers in a new form called the 1099-DA form to both individuals and IRS. The final format of the 1099-DA is not yet released, but is expected to be clarified soon. You see that? You see all that work they're trying to put on the exchanges? So this is something that they're attempting to pass, right? You know, they're trying to get MetaMask to KYC us. They're trying to get MetaMask to start asking for social security numbers. They're trying to get Uniswap to do that. They just want the money. But this is what they say. It's to prevent, money laundering. One thing I know, a criminal going to be a criminal. You want the money. You ain't worried about the money laundering. You want our money. Now, how to determine crypto gains and losses. Now, this may be a little confusing. You had a video, and I'm talking tax stuff. Whether you have a gain or loss on the disposal of a digital asset depends on the value of the asset at the time of disposal, meaning selling or exchanging or trading, measured against the cost basis of that asset based on what you purchased it for. In the late 2019, the IRS issued guidance on acceptable cost basis methods for calculating gains and losses on cryptocurrency. The IRS guidance specifically allows for only two cost-based assignment methods. First in, first out, FIFO, or specific identification. So let me help you out. You know how you write off the miles on your vehicle, right? So there's two ways to do it. You have to get a log, right? And they literally want you to write down, okay, I went from the convention center to the airport. I went from the airport to a place C and place B, and they want you to, that's pretty much what specific identification is, each step. That's tedious. You know, they got apps that track your miles and all that type of stuff, but that's so tedious. Now, what is first in, first out? First in, first out assigns the cost basis where the oldest unit of crypto you own is sold or disposed of first. What are you saying, Kryptonite? I don't even know what that means. Well, let's say I bought Bitcoin in 2009, right? Which would be crazy because I would have got it for like 10 cents. But I bought it in 2009. What first in, first out means is even though I may have bought Bitcoin in 2019, they say I could use my tax liability off the first Bitcoin that I bought in 2009. Hope that makes sense. In other words, it's like stages to the liability that I have to acquire. So I can, if I bought this then okay, and I disposed of that, that's my liability versus what I just bought yesterday. Now, what are the potential benefits of first in, first out? First in, first out currently allows the universal pooling of assets, which makes this an easier method to apply this specific identification. The IRS, don't specifically address what method is required, so a taxpayer can use either approach, pool all their accounts together, or prepare separate first in, first out calculations for each of their wallets or account. Do you see how tedious this can be? So if I got 50 wallets and I'm buying and selling and trading out these 50 wallets, that's a lot going on. And let me tell you, I'm a tax man, this, that, and all that. But I'm realizing, because I still do my own taxes, but I'm starting to dread it now. Because it's just so much. So, that's why now we got to be seeking the Lord for trustworthy CPAs and tax attorneys. And we got to be in position to where we send these young men and women to school to be our tax attorneys and our CPAs. Look, I'll pay for it. It's just you're going to be mine. I got you. Where you going, Pepperdine? I got you. Here. I'll pay for each semester. I just need you to handle all my business. Because I ain't about to do taxes. I ain't doing that. You got people that love it. The lady that audited me, she said, I love this. I had to look back, Lord Jesus, y'all sent me the one that loves doing this. I started talking about Jesus now. She went to saying amen and all that. I said, ooh, thank you, Jesus. At least she know you a little bit. But when she looked at me, I said, how do you do this, ma'am? I love it. Love this. You're looking through that paperwork like a computer. You can have it. Believe it or not, IRS agents, they make good money. They make about 130 grand, 150 grand, and they say most of them retire as millionaires. So they don't want to lose them benefits. That's why they attack so hard. One thing about them is when they audit, they don't want to go back and relook at. That's why they just come at you so heavy, because they're overworked. So they just come in guilty, because they know most people are scared of them. So you're just going to pay the money, not me. I let pride get in the way. I told one lady, I sent in a 600-page, when the lady first assessed me and said what she said, I said, the devil's a liar. I told the lady, and that probably messed me up a little bit, but I told the lady, I said, ma'am, you lying. I told the IRS agent this. She said, no, I'm not. I said, yes, ma'am, you are. So she brought up one of my clients. I said, ma'am, I provided this, this, and this. This is what she told me. I'm not reading all of that, what you sent. She hung up the phone. Come to find out, my tax attorney told me she retired the next day. She retired the next day. And then the hellhounds, they just came after me. She didn't want to look at the paperwork. I sent a 600-page rebuttal to what they sent me. She said, I'm not looking at that. Now, you can weigh your options, but if the exchange issued a 1099 to you, then it probably used a by-exchange approach. The same approach is likely easiest when completing your tax forms and could also reduce the chance of an audit because your return will match the information exchange provided to the IRS. So even the IRS understands that this is a tax accounting nightmare. That's why they want to pressure the exchanges to provide the form, because it's easier in essence for us and them. Now, what is specific identification? Pay attention. Taxpayers can also elect to use specific identification. Specific identification allows you to select which cryptocurrency unit is disposed of in a transaction to minimize any gains or losses. In the following example, you purchased one Bitcoin at a price of $5,000 in June of 2023. And on August of 2023, you purchased an additional Bitcoin at a price of $7,000. Later, you sell the one Bitcoin for a price of $10,000. Using specific identification, the taxpayer can choose to dispose of the one Bitcoin with the highest cost basis first. So highest first in and first out. So instead of choosing the $5,000 Bitcoin, you can choose the $7,000 Bitcoin to reduce your liability of $3 grand versus having to pay $5,000. I know it's confusing, but it's what they say you can do. So instead of tracking the proceeds of the $10,000 sale for one Bitcoin against the unit purchased at $5,000, the net capital gains are matched against the unit purchased at $7,000. In this case, specific identification and high-end first out, highest cost, highest in first out, enables the taxpayers to minimize their net capital gains liability by $2,000. Now, it sounds confusing, but it's just basic. If I bought it for 7, sold it for 10, $3,000. Bought it for 5, sold it for 10, $5,000. Now, what are the requirements for specific identification? The IRS, however, has imposed requirements upon taxpayers that want to use specific identification. First, the taxpayer must show the date and time each unit was acquired. That's a nightmare. Your basis and the fair market value of each unit at the time it was acquired. The date and time each unit was sold, exchanged, or otherwise disposed of. The fair market value of each unit when sold, exchanged, or disposed of, and the amount of money or the value of property received for each unit. In simpler terms, the IRS requires a complete set of transaction records when a taxpayer wants to use specific identification. Second, the IRS guidance requires specific identification to be done on per account or per wallet basis. Capital gains tax. I hope I ain't making your mind go to mush, but it's a lot. What is the tax rate for crypto? Pay attention. The IRS distinguishes between two main types of income, ordinary income and capital gain income. Capital gain income can be long-term or short-term. So what is long-term capital gains? Anything over a year and a day. So if I bought this crypto and I've had it for more than a year and a day, that changes my tax liability. Then you have short-term capital gains tax. Anything I bought that's less than a year old. Now, what are short-term capital gains? If you hold a particular crypto for 1 year or less, your transaction will constitute short-term capital gains. Long-term, if you had a particular crypto for more than 1 year, you're eligible for tax-preferred long-term capital gains. These are your brackets. 10%, 12%, 22%. This short term now, 24, 32, 35. Pay attention. You have your single, right? So if you're single and your income is between $0 and $11,000, then your tax liability on that cryptocurrency that you sold in 2023 for your 2024 taxes is only 10%. Please pay attention. Please pay attention. Many of y'all in the room like, man, come on, I make more than $11,000. And when this crypto hit, I'm going to be way more than $11,000. Not if you spend, let's say I made $1 million on crypto. Not if I spend $989,000 of it. Where does that put me? Where does that put me? Come on, wealthy people. That puts me in the what? The mic off. Hold on. Testing. Can you hear me? All right. I just snatched the mic off. Now, if you're married, $0 to $23,000. You had a household, $16,000. So let's go all the way down to 35%. Well, most of us in our crypto gains is going to put us in a quote unquote what? 35% tax bracket, right? So just for a simpler math or whatnot, let's say I made $100 million. What's my tax liability? 35? Come on now. Wake up. What's my tax liability? 35 million. So you gonna get IRS $35 million? Huh? Now let me say this. I'm not. But there are some people that don't have businesses, right? They will receive that increase. And you have some people, they're just ready to pay the IRS their portion so they can get it out the way. Now, if you want to give them 35, that's fine. My thing is, if you want to give them the 35 million and then come back later with your write-offs and get, you can do that. But as for me, I have multiple businesses, and I'm going to have that 35 million in the interest-bearing account, and I'm going to purchase things to write off. And I'm looking for jets. I'm looking for real estate. I can get that depreciation cost. I'm looking for things to buy. My wife going to say, man, you just got me a car. Why are you bringing me an 18-wheeler? Don't worry about it, baby. It's yours. Because I love you. Oh, I love you, baby. I got a custom 18-wheeler for you. Hallelujah. We can travel the country in it. I got a king-size bed up in the cab, all that. But it ain't in her name, it's in my business name. I don't care if I'm just moving one pallet to one of my work. I'll get it later. I'll be telling on myself. Then you have long-term capital gains tax. So if that crypto that I had increased, but I had it for more than a year, and let's say I'm in that 20% tax bracket, you see how it reduced from 35% to 20%. So I made $100 million. What is my tax liability? $20 million. So how can investors offset their capital gains with capital losses? Pay attention. This is the only difficult thing about crypto, right? They look at it as property, but it's not the same, because when I had that house, I was able to spend more money in fixing it up and stuff. You can't fix up Bitcoin and XRP. So the IRS allows investors to claim deductions on cryptocurrency losses that can lessen their tax liability or potentially result in a tax refund. Crypto losses may be reported on 8949. You can use the losses to offset your capital gains. A strategy known as tax loss harvesting, or deduct up to $3,000 a year from your ordinary income. I mean, that's really not a big, you know what I'm saying? There ain't nothing big. But the thing is, what really helps you offset the increase is you having businesses. Now, when offsetting your capital gains with losses, pay attention to the holding period of the assets in red. You can only offset long-term capital losses against long-term capital gains and short-term capital losses against short-term capital gains. Once you've offset the losses of the same type, your short-term losses are used first against your allowable capital loss deduction of $3,000. If you have not reached the limit on the capital loss deduction after using your short-term losses, use your long-term losses until you reach the limit. You see that? Me reading that made my head hurt. Point is, when it comes to your losses, you see how they limit it? $3,000. But let me gain $100 million. Oh, they looking for their money. That's why I have to have multiple businesses to offset it, right? I take that gain and I go buy me. I always said this: would you buy a failing business? I would, because I can write off I can write the losses off, because that benefits me and it allows me to keep more of my money. I know it don't make sense, but you know what? You ever seen that show? It's called The Prophet, not prophetic, but The Prophet. And what does he do? He buys what? Businesses. And he helps what? Turn them around. What does he do? I'll pay all your debt. You got to give me all 100% control. See, all that stuff he's doing, he can write off. Now, even though he turns the business into profit, but still he's buying a what? Failing business, and he can offset with the losses of the business that he just bought. You see how this works? You see how they say the rich get richer? And they say the poor get poor. But the rich, you see how the rich get richer? Now, how does crypto staking or mining get taxed? Each staking rewards may potentially be taxed as income equal to the value of the coins at the moment of receipt. So in other words, let's say I give Jason 5 Ethereum. Here go your reward, sir. Ethereum is going for how much right now? 3,000 what? Huh? 3,500. 3,500 times 5 is what? Huh? 20,000. Okay. Well, he's responsible for taxes of the $20,000 that I just. Now, let's say I give it to him. I give him the 5 Ethereum. It's worth $20,000 today. But then next week it drops to 1,500, where he can offset that. But he's still responsible for 1,500 times 5. He's still responsible. But he can offset it now with the drop. I'm kind of rushed. I'm trying to rush through because I want to be on time because we got a real estate guru in the building. This is a lot. Now, rewards or yield earned by staking other cryptocurrencies will be taxed as ordinary income. You see the difference? You have capital gains tax, and then you have ordinary income tax, 2 different things. So when I get rewards or I earned a yield, they tax me from an ordinary income. So what's ordinary income? You working at Walmart, you get the W-2, ordinary income. It will be taxed as ordinary income, and the same applies to any income earned by mining on networks such as Bitcoin. Now, how are crypto airdrops taxed? If a platform does an airdrop crypto into your wallet, you generally have to pay taxes on the proceeds. Typically, airdrops are taxable as ordinary income at their fair market value. So if I airdrop you, whatever, 10 ETH, you're responsible for, because that's ordinary income. You just received $40,000. If you dispose of the airdrop asset, look how dirty they are now. I airdrop you 10 ETH, so now that's $40,000 ordinary income tax liability. And then if I turn around and dispose of it, that's a capital gains tax. Let me help you out. I give you 10 ETH at 3,500, 40 G's. Let's say that 10 ETH goes to 37, I dispose of it. Now I'm at 45 grand. It's short term. Now they're looking for 35%. Or what? I'm sorry, whatever tax bracket you fall in. You see that? You see how crazy and tricky all that stuff is? They double tax it. Do you know that if you pay for stuff in crypto with your crypto debit card, do you know every transaction is a taxable event? Man, I'm just getting coffee. Okay, they don't care. Because you bought the Volt Enu when it was at 5 zeros and a 6. Now it's at 1 cent. Even though you bought the coffee, there is a capital gains there. Ooh. All right, that's something to deal with. So it says right here, if you dispose of your airdrop asset, you may also need to pay short-term or long-term capital gains on increase in its value during your holding period. See that? Now, whenever you spend cryptocurrency, it qualifies as a taxable event. This includes using a crypto payment card. If the price of crypto is higher at the time of a purchase than when you acquired it, the disposal of the crypto will be recognized as capital gains and taxed accordingly. You see that? If you make purchases with your crypto debit card when your assets are in a loss position, you can actually use the capital loss to offset the capital gains with a strategy called tax loss harvesting. You still have to report it. Now, how are crypto gifts and donations taxed? The IRS distinguishes between a donation and a gift for tax purposes depending on who receives the cryptocurrency. If you send cryptocurrency to a qualified charitable organization, this is considered a donation. Let me help y'all out. When you get your LLC, you need to get a nonprofit too. I hope this is making sense. So if you get an LLC, you need to also get a nonprofit. Think about it. So my LLC, okay, I got an increase in crypto, whatever, and I bought 30 Teslas. Okay, that's to offset the liability. And then I turn around and donate the 30 Teslas to my nonprofit. Catch it, to my nonprofit. Come on now, you got to think wealthy. So if you send cryptocurrency to a qualified charitable organization, this is considered a donation, also referred to as a charitable contribution. If you send cryptocurrency to family, friends, or a crowdsourced campaign for someone with medical bills, it's considered a gift. Why do you think the wealthy become philanthropists? Come on now. I need to be looking for some medical bills to be paid. I want to be a blessing, right? I got to get this out of my hands. That's why you got to be a distribution center when the increase comes. Why not? Because it benefits you. First of all, you're being a blessing and you get the benefit. Neither gifting cryptocurrency to a friend nor donating cryptocurrency to an eligible charity are taxable events. But donating the crypto may have an additional tax advantage depending on your situation. You may be able to claim a charitable deduction on your tax return for donated crypto. It's no different if I donated an apartment complex. Same thing. So how are crypto to crypto transactions taxed? Exchanging one crypto for another is what? A taxable event, regardless of whether it occurs on a centralized exchange or a DeFi exchange. If you trade one Bitcoin for 10 ETH, for example, that will qualify as a taxable disposable of the one Bitcoin. One Bitcoin priced at the fair market value of the 10 ETH acquired in the transaction. Example, one Bitcoin. The date you purchased it, it was worth $40,000. The date of the trade, it was worth 70. But then I take the date of the trade is at 70 and I buy 18.6 ETH. I got a capital gains of $30,000. Now, whether it was in a short-term or long-term basis, how long I had the Bitcoin, but the point is that's a taxable event. See, a lot of people think because they trade out of it, they ain't got to pay the taxes. Since when? So how are NFTs taxed? NFTs qualifying under the IRS definition of digital assets. As such, they are considered property, so they tax them the same way as crypto. In addition, certain NFTs may be considered collectibles. So you know the IRS taxes collectibles different. Collectibles by the IRS and therefore will be subject to higher taxes. Hey, don't that sound crazy? NFT stakeholders are eagerly awaiting formal IRS guidance on whether they should be taxed as collectibles. They haven't passed it yet, but these are the things that they're considering. Top 10 crypto tax software for 2024. They got on their TurboTax. But Coinly, Coin Tracker, Zen Ledger, BlockPit, TaxBit, Token Tax, Crypto Tax Calculator, Coin Ledger, Coin Tracker. Now, you see it says free plan, yes, 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 no, yes, no, no, yes, yes. These are how much these tax softwares cost. $129, $169, that's in euro. $199, $1,000, $639, $500, $3,000. Now that's crazy. $500. Think about tax software, y'all. You have to get new tax software every year. Does it support NFTs? It gives you the list. Yes, yes, yes. Please take a picture of this. You will get. Does it support mining? DeFi support? See, these tax softwares support these different areas. Oh, That's it. Oh, wow. Oh, yeah. What? Hold on. Yeah. Oh, that's it. Okay, I'm on time. All right. So do we have any questions? Because you got like 3 minutes. Because I want the real estate. So go up there. Now, did that make sense?
I've looked into some crypto tax software. I'm not sure which one, but they require you hook up your Coinbase account, your ledger. They require you to hook your stuff up, and I think I didn't do it. It seems like a security risk. What do you think about that?
Well, I've done that, right? And it wasn't. And I get, because we have to have a healthy paranoia. So you got to make sure that you're on the right site, the right tax software, because you link up to the wrong thing and get wiped out. But I've done that where I linked my Coinbase account. I've linked my crypto.com account that was able to get all the transactions. So I've done it and everything was fine. You just got to make sure you're on the right site and you know, because as of now, that's the only way you can do it so they can get all your transactions.
There are certain time frames that you can buy a business and claim the tax losses of the following year, right?
Uh-huh.
So that means if the wealth transfer happens between now and that time frame, and we don't have these companies established, then we're on the
There we go. Did y'all hear what he said? That's why I said you need to get your LLC now. Don't be trying to get it after you got the increase, because you can't justify any write-offs. Wait, who's next?
Oh, go ahead. Go ahead.
And get close so I can hear.
I got a question. Okay. I've been asking, I'm from Maryland, but you want to open a nonprofit.
Okay.
Supposedly, what happens if I want to be a nonprofit in Peru, not only here, that will be international, correct?
Uh-huh.
Back home, like, it's like a dead end. They says, oh, no, you can't do that. I said, it doesn't make any sense to me. But is it doable, or it depends on the state, or maybe I'm asking the wrong questions?
I mean, now, if you're trying to open up a nonprofit in Peru, that's a different country. But as far as the IRS is concerned, you made the money here.
Exactly. Let's say.
So they're going to allow, per se, you to write something off that you're doing in a business that was not established domestically, internationally. So you need to have your LLCs and stuff like that domestically, so you can get credit for the offset the tax liability. Now, I'm not saying don't have your nonprofit in Peru, but don't. Now, that would be a offset tax liability in Peru. But as far as the IRS is concerned, no, you made the money here. We want our tax money here. And you may have spent it and built a hospital in Peru, but that was in a different country. But if you built that hospital here, then that's something totally different.
So we're better off spending it here. Whatever you do over there with them.
Yeah. Listen, y'all, I told you make $1 million, you want to spend $989,000 of it because it puts you in the lowest income bracket.
Okay, so we have to report any gains and losses as a tax. You have to report as taxes.
Mm-hmm.
What about all the transaction fees every time you buy and sell? For example, Coinbase and Kraken, they give you, every time you buy or sell, they give you estimated fees. But some other forms doesn't give you the transaction fees. So how do you come up with, or how do you keep up with the transaction fees? And other forms doesn't give you that estimated fees.
So number one, we all know that the fees you can write off, right? If I use PayPal, right, they have PayPal fees and all that, I can write those things off. Since crypto is so new, now Coinbase may contract the fees, but these other, you're going to have to keep up with it. You're going to have to be like, so for example, let's say I have an Ethereum coin, my gas fee was $50, right? You have to write that down.
No, I understand that I have to keep track, but they like for example, Coinbase, or they give you, if you buy or sell, they give you estimated fees, but some other platforms, they don't give you the fees. So how do I calculate what percentage they're charging for that particular transaction?
Now, when you say other platforms don't give you those fees, no, I mean, you're right, but they, for example, like Crypto.com, right? I use Crypto.com to exit. That's my exiting out of the market. So I may have $900 worth of Solana, but after I change the Solana to cash, it goes from $900 to $850. Well, I gotta, they don't necessarily show me that, but I know the numbers, then I write that down.
Okay.
Like, it's like you have to, it's a headache, but as of now, we have to manually do it because all the platforms, they don't operate that way.
So you have to manually calculate
You have to
it
manually
and keep in the log.
Yep.
So you keep track of it.
Because you can track it. Yes, ma'am.
So are there limitations to providing gifts to family members or friends, like quantities, in which it then triggers some sort of...
Yes, there is.
Okay.
So, like, the IRS ain't gonna believe you. I'm gonna give you 50 million.
Right.
There's limits on it. Now, limits of how many, no, but there's limits on that quantity. Now, if I got, for example, you know, Jacoby has 70 first cousins. 70. Whatever that limit is, well, here you go, 70 times 70. You can do that, but there is a limit on that amount.
Okay.
Yeah, because that's where you go to Form 709 and they show you those thresholds. All right, we got one more and we got to get started because this real estate is critical.
I have one question.
Come close.
Yeah, I had one question. So, you said that this point is to set up an LLC, right, a nonprofit organization, and then do the business tax write-offs. If I set my exchange, would it be smarter than to set up when you getting into all these exchanges and you're signing up for it, wouldn't it be just smarter to set up on a business account instead of an individual account?
Yes. Yes. When you have your LLC, you must go immediately set up a business account. Immediately. And start conducting all your business and transactions out of that business account. Immediately. The truck that I have, it's in my business name, not my name. Everything I got is in my business name. Everything. My truck, my wife's vehicle, everything in my business name. Everything. Because when it comes to the IRS, it's black and white. It ain't no my name, I use it for business. No, it's in the business name right there. It's registration right there. Bought it, there you go. You don't want to leave any gray areas. You don't want nothing in your name that doesn't have to be in your name. Put it in your business name.